Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So I had a great question asking, do I worry about a declining population in the areas that I buy real estate in? And the second question is, why not just buy one or two good properties in kind of high areas where billionaires live versus owning 52 units in, let's just say, Oklahoma, right? So let me answer the first question, talking about declining population. So for me specifically, I target real estate markets that have population growth, and usually where population growth is, there's job growth, right? Because the people follow where the jobs are. So most of my single family homes that I purchased in the Bay Area um, are in Silicon Valley, right? So there's a lot of tech jobs. I know that tech jobs are very cyclical, right? It goes up and down. It's a little bit down right now with layoffs, but despite that, to be honest, there's been a lot of great tenants. I've had the same tenant since day one, since I've rented out the property, and they've taken care of the property. And if they were to leave, I'm not worried about finding a replacement because there's a lot of, good tenants out there, and kind of for better for worse, when a tenant leaves, it gives you an opportunity to raise it up to market rents if your current tenant hasn't been paying market rents, right, or below market rent. So when there's a turnover, yes, it's inconvenient. You have to fix up the house, clean it up, advertise it, but you could potentially start to get market rents, right? So, for me, I always buy in markets where there is population growth, right? So, um, I basically own in California, which has a lot of population growth, right? There's people knock on California, but overall the weather is nice. People are influxing here. There's jobs here. It's very unique. So in California, even though people are leaving to like Texas, Arizona, Nevada, there's still people coming in, right? So I'm not really worried about declining population in California. I feel like I've been hearing for the past like 10 years that people are moving to Texas, and yes, you could move to Texas, and it's cheaper to live there. It's very affordable, but then there's some downsides as well, right? So there's pros and cons to everything. For me personally, I just like to live where I like to live. That makes sense for my lifestyle, and that's it, right? So I'm in a high cost living area, obviously being in the Bay Area now, Los Angeles. But you take the good of the bad, and is it worth it to make that trade off? If so, great. If not, then live somewhere else, right? That's what's nice. So in California, I'm not really worried about declining population because there's always jobs here, and people are gravitated towards this area. Now let's talk about Oklahoma, right? So Oklahoma, what I like about Oklahoma is I call it a steady Eddie market. So for me, over the past 10 years, the population hasn't gone up exponentially, but hasn't gone down either, right? So it's steady Eddie in terms of growth. Like I think the population grows about 2-3% every single year, right? So that's why I like that market. And there's jobs there. There's a job, lots of job diversity in Oklahoma, and in California too, right? Like in California, there's tech, there's a lot of agricultural jobs, there's so many different jobs out there. In Oklahoma, same thing, right? There's like a lot of different job sources so that the market isn't dependent on one major industry, right? Like versus like Bay Area, you could argue that it's mostly tech, right? So it's dependent on tech. If tech's hot, real estate shoots up. If tech is not hot, it slows down a little bit, right? But in Oklahoma, it's steady Eddie. Like that's why when I look at my markets, I want to make sure that there's a diversity of jobs, so I know that overall the population will not decline, right? Um, so it's hard to predict in the future, right? I don't have a crystal ball to see what it looks like, but just looking at the job diversity and population growth over time, and you know, job growth, it's kind of good indicators, right? If you see kind of rents organically increasing, it's a good sign, right? Now, in 10, 15 years from now, it's hard to predict, right? If population were to decline, how I would be affected is my apartments, for example, Oklahoma would have more vacancy, right? I've been averaging about 90 to 95% occupancy. My 20 unit right now, I think 19 out of 20 are rented out. My 26 unit, I average about 24 out of 26. So, it's if it were to drop down to like maybe I can only do like 80% or 75%, then at that point maybe jobs are leaving, and if jobs leave, then people leave. If people are leaving, there's less demand for rent, and rent prices go down, and there's higher occupancy or vacancy, right? So those would be kind of the signs. Um, and at that point, you have to make a pivot. Did you buy the property good enough that it'll still cash flow? If not, then maybe you start considering to sell your property, right? Like if that's the case, and if I have to deal with lower occupancy or lower my rents, obviously that's not ideal. But I bought my property at such a low cost basis that it can still sustain, right? So, um, if I did notice that population was declining, then I would start to kind of unload those properties and moving the money elsewhere. That's the beauty about real estate, right? Like once you build up equity, and you bought it with a good margin, you can sell it, take your money, and move it somewhere else, right? Like for example, for me, I right now I bought it for half a million, put in $300,000, all for 800, and it's worth 1.6. And obviously I have a 7 to 10 year term loan on this property because it's a commercial loan. So if I refinance, I don't have to pull money out. I can keep it low if I'm concerned about declining population, or if I'm not concerned, then I can pull a little extra money, right? So, and if it is declining, I can just take refinance it and consider selling it, right? But it's a cash flow market, and the rents have been steadily going up, from my experience, right? So it's really hard to predict. And to kind of answer the second question is like, why not buy in good areas? Like I actually own in both areas, right? So I own real estate in appreciation markets like California and in cash flow markets like Oklahoma. And why I own in both is I want the balance, right? My California, I get a lot of flack for this. Like I own $5 million worth of real estate, but it only cash flows $10,000 a month, which is low. And the reason for that is because a lot of my California single family homes, they don't rent for that much, but they're worth a lot, right? Like one home's worth close to 2 million, and market rent might be like $6,000, right? That's not much. Versus if you were to own a $2 million apartment complex, you could probably gross rents like 25K a month, right? Versus 6,000 for the single family home. So, so in California, they're usually cash flow negative, and my cash flow real estate's even more cash flow negative because I pulled out a bunch of equity to go buy apartments in Oklahoma, which then support those properties that are cash flow negative. But collectively, I am, positive 10,000. So whenever I want to move towards more cash flow and want to step away from my W-2, I can, sell these assets in California, take the equity, 1031 exchange it, and put it into a more cash flow market, right? I could use that equity to buy an apartment complex in Oklahoma. I can use that equity to buy multiple brand new build single family homes in Huntsville, Alabama, right? That are more cash flow focused whenever I'm ready to step away from that W-2. But for now, since I'm working W-2, I want to kind of ride out the appreciation of California because it is pretty insane, right? In terms of the appreciation. And that makes a lot more, will build you a lot more paper wealth. I'll preface it as paper wealth versus if you were to, transition that over to like Huntsville, Alabama or Oklahoma, where it's more cash flow. So you get money today, which pays the bills, right? So I understand, cash flow is king. You need cash flow, but if you want to build large amounts of wealth faster, it's going to be through appreciation, whether it's market or forced, right? And then you take that forced appreciation or market appreciation and then 1031 exchange that into a cash flow market, right? Like for example, my uncle, he had a house in Fremont, a lot of equity, sold it, and basically used that to buy like 5 or 6 rentals in Sacramento, which was cheaper. So he took that equity out, changed it into cash flow, right? So like this is the phase of wealth building, right? You're building up appreciation, and then you trading that appreciation for cash flow whenever you're ready to step away, right? So there's no right or wrong answer. There's so many ways to build wealth, right? Like it's nothing wrong with me just holding it to my current portfolio, let the appreciation build, and there's nothing wrong with if I were to decide, you know what, I want to sell it today, 1031 exchange it into an apartment complex or multiple single family homes in Huntsville, Alabama that cash flow, right? There's no wrong answer. It's the options, right? I'm privileged to have these options. So for me, I prefer to have a little bit of diversification in that sense, between my California real estate as well as my Oklahoma. So I have markets in, appreciation focused as well as cash flow focused. And together they create this nice harmony to give me the best of both worlds, where I get cash flow enough to step away from my W-2, but also still get appreciation, right? So I'm not like all cash flow markets, right? Because, like Oklahoma doesn't appreciate as much. Huntsville, Alabama doesn't appreciate as much, right? So it's really that portfolio balance, right? That's what's nice about investing in multiple markets. So for me, I don't like owning, like, let's just say, two homes in really nice markets, because like if it's vacant, then if you have two homes and one's vacant, your portfolio occupancy is 50%, right? Versus, or if one tenant stops paying you, you just lost half your income. Versus in my apartment complex, if I have 20 units and one stops paying me, I still have 19 paying me, right? So it's a little bit less risky. So, overall, there's no right or wrong answer. What I always kind of advocate is invest in your unfair advantage. So for me, my unfair advantage is single family homes in California, because I can't afford apartments in California yet, and apartments in Oklahoma, and single family homes in Huntsville, Alabama. Like, those are my three advantages. So I just basically am moving my money around in these three areas that I have an advantage in, to basically build up my wealth moving forward, right? And keep in mind, I'm only 34. So if I just keep on playing this game of real life Monopoly over the rest of my life, like, I'll build up so much wealth that I won't know what to do with, right? Even in current state, I never thought I'd build up this much wealth. So, like I said, I'm just playing in my areas. So if I were to summarize my three markets, this is how it is. California, it's all appreciation, negative cash flow, right? But insane amount of appreciation. And I live in California, so that's my unfair advantage, right? I know the areas, I know the pockets, I know the neighborhoods. In Oklahoma, it's all cash flow, not much appreciation. That's why I have apartments in Oklahoma, because that's why I don't do single family homes in Oklahoma, because that would just be all cash flow, no appreciation. But apartments, I get more cash flow, and the more cash flow I get in apartments, it forces the value to go up, right? Now, if my cash flow were to go down, because my net operating income went down, then my equity would go down. But that's why I'm doing apartments in Oklahoma, and that's why I do apartments in cash flowing markets, right? It doesn't make sense for me to do it in an appreciation market. So that's why I have Oklahoma apartments, and then also I have single family homes in Huntsville, Alabama, because that's kind of the middle ground, right? Like, Huntsville, Alabama will cash flow, right? Like, a little bit, but it also gets a little bit of appreciation too, right? So it's kind of like in between. So I want to balance out these three, um, based on my, kind of situation in life, right? So if I want to step away from my W-2 and just completely step away from pharmacy, then I would sell some of my single family homes in California, and then trade that to buy cash flow apartments in Oklahoma, or cash flowing real estate in Huntsville, Alabama, right? If I'm okay working still, then I'll continue to hold on to my, California single family homes. So I call my California single family homes like little piggy banks that I'm going to cash in one day to trade in for cash flow, right? So, like I said, there's no right or wrong to do real estate. It's just what works for you long term, and where do you have an unfair advantage in. Anyways, hopefully you found value from this video. If you're interested in buying your first apartment complex with some guidance, check out the mentorship program. Otherwise, let me know if you have any questions. Please like, comment, subscribe, and hope to see you next one.